Next, we'll have Erick Rangel, CFO, to present us the second quarter of 2021.
Good evening. A little bit more finance, but I'll try to be quick. So let's start with the first half. As always, we start with our tax revenue. The table on the left represents our revenues by type of tax. The first column is the type of tax. The second column is our budget as a total for the year. The third column is our prorated budget. That means where we should be at this point of year based on historical intakes. The next one is our actuals. The one following the two columns in yellow, the first one is our surplus or deficit versus our budget at this point of time. And then the last column, or sixth column, would be the percentage variance. So the story here, if we look at the first total bolded row there, is that our sales-driven tax is about 9.7% better than budget, or $694,000. The chart on your right shows also that year over year, our growth has been 8.6%. So we're not only growing year over year, but since our budget is conservative, we're actually doing 9.7% above budget. If we add the property tax, which is the second bullet line, our full tax-driven revenues for the first half are 9.4% higher, or $844,000. So this is a material increase versus budget, but we gotta be cautious that this is being compared to COVID last year, which were lower numbers. So even though it's a good story, we gotta keep that into perspective. And lastly, I would just like to note that our current experience growth, it's in line with what we budgeted this year. So we expect that all things being equal, we will end up the year at budget or at a surplus versus budgeted in terms of revenues. So this slide just gives a little bit of a snapshot to the revenue by industry. And the trend is the same as last quarter, where we've seen decreases in the construction, manufacturing, and transportation industry. However, these industries decreases have been offset by increases in the wholesale trade, the retail trade, the finance, insurance, real estate industries, and the service industries. If you would like more detail on this, you can access our city tax information website, which the link's listed in this slide. The next slide provides an update on the remote seller tax. This is sort of called the internet tax. And this information dates back from October 20, which is when the Department of Revenue started reporting our tax levels. And just a quick stat, on average, since it's being reported, it's about 7.3% of our total sales tax. This year, it's been fluctuating anywhere from $76,000 by month to all the way to $109,000 by month. It'll be interesting when we start getting comparable data year over year to see what the trends are. This is also in our website for our tax report. The next slide shows a little bit of a snapshot of the general fund that Ashley was discussing, but how we're doing compared to budget. The structure is the same as the tax revenue. The only addition here is the last column on the right is how we're doing in terms of revenue. This revenue is not tax-driven. These revenues are the fees and other expected revenues that we're expected to collect. The story here, we look all the way at the bottom, is that as we see it right now, we're at 44.1% of our expenses. At first half, we should be at 50% more or less. That represents right now a $864,000 surplus versus the budget. This surplus is mainly driven by timing of revenues, but also some vacancies, especially in the PD department. In terms of the revenues, we've also been, we're higher $509,000. That's mostly timing of revenues. So right now, our revenues are very stable. You can see within the department, some of them are currently at deficits. We've investigated those, and they're just driven by timing as we compare to things hitting earlier this year than expected. We don't expect any of these departments to run at a deficit. We expect that at the end of the year, all things being equal, all the departments will meet budget. Next, we have our capital fund. The table on your right, the CAP, the first row shows that we're all the way to the right at 17.6% or $1.9 million of usage. The pie chart on your right shows what the distribution of the expense at the end of first half is. Mainly fire department expenses, infrastructure work on streets, bond payments, and vehicles bought for different departments of the city. It is important to remind that the heavy activity for this fund is in the third quarter, which is happening right now, and ends in September. Overall, our budget right now at the end of first half is 30% of budget, and again, no red flags here. Everything looks on track. Moving on to the City Council priority project list. We'll start on the left side with the general fund reserves. Just as a reminder, these references are the unassigned reserves of the general fund, which starts by our estimate of where we are. The first number we have there is $14 million. That's the unassigned reserves that we're currently estimating that the city has. We take out our reserve, our operating reserves dictated by our G&A policy. At the end of the day, we're left with $10.5 million to fund the City Council priority projects. The table right below that shows $1.4 million of approved projects by City Council. These are the facility improvements that came from the McKean Street study. If we factor that out, we end up with $9.1 million available to fund our primary projects. These projects have not been officially approved by City Council, but at some point they've been shown interest and would be the next in line to approve. The list here shows them in priority order. So the first project is the 2022 facility improvements, which are about $1.1 million. The fire department training tower for $440,000, the public safety center for $7 million, the housing study for $40,000, the food bank for $30,000, downtown master plan for $35,000, and then the indoor rec facility for $850,000. The total of these unapproved primary projects is about $9.7 million. Doing the math, if we were to fund all of them at this level, we would be at a deficit of $664. It is important to note that the city is actively looking for grants for this and the projects on the right side of the chart as well, and we will adjust our recommendations to fund as we receive them, but that's the current snapshot. And lastly, on the right side, we have our secondary projects and then our desired projects, which are not in order of priority. Next slide, we'll talk about the financial performance of the Swiftrail Center for this first half. I'd like to focus on the third column of numbers here because that shows our surplus or deficit versus budget. And as you all know, our first half of this year was very challenging for the industry, and it translated the same for the Swiftrail Center. Right now, the revenues see that a 64% reduction or on $951,000 lower than expected with budget. With that, the Swiftrail Center management actually were able to reduce expenses by about 50% or $757,000. That equates, because we weren't able to reduce as much as the revenue reduction, we're currently sitting on a projected $193,000 deficit to budget. However, we believe, all things equal, that the second quarter will be better, and the new management is booking and it's aggressively implementing revenue-generating strategies that will help reduce this deficit. In addition, we're also exploring potential revenue loss grants. There's one called the Shuttered Venue Program that we're researching, which could help offset some of the revenue losses. So more to come on that, and I will keep updating the council as we made any progress on that. And lastly, I would just like to provide a venue management transition update. Spectra took over management as of last week on August 1st, and they're getting ready to host the Willie Nelson concert tomorrow, which they are expecting around 4,000 attendees to that event. So, a little bit of an economic update. I'd like to just focus very quickly on the table there. The real GDP or growth estimated for the U.S. In 2021 is about 6.6% growth. That slows down in 22 to 3.8%, and then 23 to 2.5%. This growth is mainly driven by consumer confidence, fully reopened economy, and higher savings among all factors. Locally, we expect the same growth to be even or maybe stronger in our region, just because we're experiencing the same factors and trends for the key growth for the U.S. as a whole. However, I think this is very important to be cautious about. We're closely keeping an eye on three main factors that most of us are aware of. Number one is the tight labor market, the supply chain issues, and a potential another COVID wave, which could jeopardize our growth and slow down growth. So we remain wary of that, and that's our guidance for now. Next, I would like to provide an overview of the American Rescue Plan. This is, if you put it that way, it's kind of like the second round of COVID relief funding for governments. This table shows what is allocated to local governments. So I'd like to divide the left table in two sections. We have the direct allocation and then the additional programs. So from the direct allocation, the city has been allocated $4.3 million all the way to the bottom of the table, bottom left, which could be used to pay for eligible expenses that happened between March this year and December 2024. And the early guidance that we've received from the federal government is that it could be used for revenue loss, premium pay, some infrastructure projects, or public health or negative economic impact offsets. No clear guidance has been released yet, but that's kind of like the early guidance that we have. On the right side, there are all additional programs, which means additional grants above and beyond this $4.3 million that cover different areas such as small business, infrastructure, connectivity, and public health. So with that, the city developed a strategy, and we hired an advisory firm to help us maximize the grant opportunity that's currently in the market. And per their recommendation, we will aggressively pursue all the other programs, which are on the right side chart, to be able to not tap into the $4.3 million direct allotment unless we need to. So the strategy is to maximize that one and then go after our allocation. The guidance for the other programs has not been released yet, but in the meantime, the city is collaborating with our economic development agencies and BMU to develop a list of projects and prioritize them based on the city council strategic plan and be ready for when the guidance comes out so that we're ready to apply and again, capitalize on these opportunities there. On the other hand, staff is also working with the state to learn about the direct allocation and also maximize the opportunity there while complying with all the guidance. And lastly, I'd like to share the good news that our city has been awarded an AA3 or investment grade rating by the Moody's Investor Service in 2021. This categorizes our credit position as high quality with key favorable credit factors such as healthy financial position, affordable debt, and pension and other liabilities. I believe that the city has maintained this credit for longer than the last 3 years. And lastly, I would just like to thank our predecessor, the former city council, and our former city leadership for leaving a solid base on for our financial health that is key to achieving this credit or maintaining this credit rating. With that, I'll open it up for questions. Yes? Oh, I'm sorry.
Council Member Nick Wendell.
I like that, thanks. Thank you, Mayor. Eric, I had a couple of questions. One of them is related to something you just noted about the American Rescue Plan.
Sure.
It sounds like this next round of funding or this round of funding could be used to cover revenue loss. Is that new? I seem to recall in the first round we couldn't use it to make up revenue loss.
Correct, is one of the main changes.
Okay, that seems like a good thing as we think about facilities that are still trying to operate in a different environment. My other question comes from our slides are different numbered than yours. So I think it for you was like slide 37. It was the city council priority project list slide.
Okay.
At the very top, and this is a refresher for me, but I suppose if folks at home are looking at these line items, they might question the difference between under the general fund reserves the difference between the general fund reserve balance of 15% and that budget stabilization reserve, why we break them out in different line items. And I know I think by charter we're required to do that. I'm just curious why we break them out separately.
Yeah, and that was actually a new policy that we created through council here just about 3 years ago. Best management practice has about a 15% or 3-month reserve for most industries and local government. More importantly, because the city of Brookings is so dependent on sales tax and it's so variable at times, especially through things like what we're experiencing here with our local economy, we added an additional 5% on top of that to assure that we can still provide those essential services to our citizens that they desire through times of economic. Now, within that policy, there's also some restrictions. If we tap into that 5% stabilization, we have to cut the organization in order to refund that to make sure that we're having those reserves funded. So it's about 20% at the end of the day, and that's just to assure that the council never has to cut operations for our citizens.
Thank you for breaking that out. I know for some folks, they maybe have frustration when they see growing reserve numbers, but I think that stabilization line item was an important consideration. So thanks for articulating that. My last question is one that I'm not certain we know the answer to yet, but when I saw that big monthly number coming from the remote seller revenue, I was just curious if Amazon will continue to be considered a remote seller after their distribution center opens in Sioux Falls, or if we know the answer to that yet.
That is a good question. Yeah, I'll have to do some research on that.
I have no idea what percentage Amazon sales make up of that.
And we probably wouldn't be able to know that.
Sure. It just seems as though that's an impressive number, $75,000 plus monthly. And if Amazon's not considered a remote seller after that distribution center opens in Sioux Falls, I would think that number might decrease.
Well, I guess I'm looking at the definition in the note, and it states that the definition of a remote seller is the one that lacks a physical presence in the state. So based on your question, I don't know if the operation would be considered part of their business, or is it just logistics? But either way, if we don't get it there, we would get it through sales tax. So it would just shift buckets at the end of the day.
Thank you.
Thank you, Mr. Mayor. I was looking at the City Council priority project list, and the last time we looked at this, it seemed like the numbers were quite a bit lower. And now they're like up to 14 million. Am I missing something, or?
So in terms of the reserve or the cost of the project?
The current estimated unassigned liquid assets balance.
And that's a good question. So before we wrap up the audit that Ashley just wrapped up, we go with estimates, and we have sort of like a variance factor there. So we sort of like updated this balance based on the actual result. But and then last time, I don't believe I broke down the stabilization reserves. They were kind of like taking out, and I just left you with a number, which may, look different at the end of the day. But I believe last time I checked the difference, we're about $300,000 less than what we projected last time. So we were probably like at $10.8 million to start with, and now we're at 10.5.
Thank you.
Councilmember Brink.
First, I wanted to say kudos to the finance department for 2 really excellent reports tonight. And it's great to see how well you've done nurturing that credit rating and protecting that for all of us. So thank you for that. My question is about the relationship that we have with Baker Tilly. I think that's the vendor. I'm curious, I think you mentioned there are unknowns in terms of how that money is going to ultimately be able to be spent from the federal government. So I'm curious about how Baker Tilly can help us and how we compensate them. Is it based on if they're able to help us, or are we paying a flat fee regardless of if they're able to actually help us get through that process?
Great question. So the reason why we partner with them is because they have grant experience, and as we all know, we're sort of short-staffed at the city as a whole, but we want to take advantage of this opportunity. So it's kind of like an outsourcing of research grants, compliant document, and they have the right experience. The way we're tackling this is like the city, BMU, and Economic Development Agency, we came up with a list of 40-something projects, and we provided them to Baker Tilly, go out and research and let us know of available grants. And so they're being compensated by the time spent doing that. And then obviously, if we see success and we will continue partnering with them, if we don't, then we will just take it somewhere else.
I would add to that, if we see a grant that Baker Tilly tells us we have potential of obtaining, they would ask for a certain dollar amount to write that grant on our behalf. And what we'd have to do is determine whether or not it's worth the funds. For example, if we're looking for $1 million grant and there's high potential we can get it and it costs $20,000, that's something that we'd recommend doing.
And we have a high trust that if they say it's not worth going after, it would be something that we're not going to pursue.
Correct.
Thank you.
And it's not that they do the research on their own. They connect us with the people. Like we've had multiple calls with the Economic Development Agency based in Sioux Falls. And so we're involved, but they kind of like do the heavy lifting and then they bring us on board. So we're definitely involved as well.
Councilmember Byrne.
I just wanted to draw attention to one item on the priority list, and that's the fact that even though we have some of these kind of set in a certain priority, the ones on the left and then the ones on the right kind of being secondary but not necessarily set in a certain order, those are subject to change, correct? And I think one that we can certainly use as an example is the dog park for Sex Hour Park. That's on the list here, but as we know, we've been looking at the grant for that and kind of moving forward with that process. So I just wanted to maybe bring attention to the fact that even though we have this priority list set somewhat in order, some of that is subject to change pending opportunities with grants and things of that nature.
Correct. No, those are our recommendations, but you guys can change them. And yes, you're correct. I was reviewing this with Dusty, but the package was already out. It's like we got the grants. Like we'll remove it for next snapshot. Yeah.
Well, and I'm glad it's still on there. It is a great illustration of the fact that these can change, and we're actively pursuing grant opportunities. And so I think it's great. But just wanted to note that for the public that these are definitely subject to change.
Correct, and that 44 project list that I was mentioning for Baker Tilly, most of these projects are in there too, to see if we can find funding for them.
Councilmember Bacon or Avery, do you have any questions or comments? Okay, thank you very much, Eric.